Gold investing chaos. Hey everyone, it's Wolfgang. There's been a lot in the news lately about the tariffs the U.S. has placed on Switzerland. And so in this video, I'm going to discuss that. I'll discuss the situation with gold being imported from Switzerland into the U.S. and being subjected to this 39% tariff. So I looked at the spot price, and it's right around $3,400, $3,397 when I looked. About $3,400 is the current spot price. There's some uncertainty as to which forms of gold coming from Switzerland that the 39% tariff is applied to. The U.S. erected a tariff on Switzerland like it has on other countries because there is a trade deficit with Switzerland. I think it's like $41 billion is the trade deficit. For the size of Switzerland, it's a pretty high deficit. And so the Swiss president did visit the U.S. last week because the U.S. is placing this tariff for the same reason that the U.S. is placing tariffs on all the countries that we have a trade deficit with. We're trying to get to equal trade, balanced trade. And one way to do that, you know, these countries, you can drag them kicking and screaming and they still won't take the right action. So tariffs are a reasonable choice. And so, so who exactly would buy gold in the U.S.? Who's buying gold? Okay, so hobbyists, you may have a hobby investing small portions of your money in gold. You may be adding to a portfolio, a mixture of assets, a portfolio that consists of, say, real estate, stocks, bonds, gold, other types of collectible assets. Gold is being advertised, as we all know. We're sort of bombarded with ads online, TV, and radio. So, you know, we're exposed to ads to buy gold constantly. The price of physical gold in the U.S. should be fairly stable. There should be pretty consistent demand for it. There's a lot of people, a lot of different types of people buying gold. The price should be stable. Right now, at least, any imported gold will have to be priced higher because of this tariff. It's not just Switzerland that's suffering or being subjected to a tariff, but Switzerland is in the news. Gold dealers cannot eat a 39% tariff, right? So the tariff for gold coming from Switzerland, we have to think about who is going to pay that and how will that affect the price of gold that already is physically present in the U.S. If you think about it, it shouldn't affect the U.S. price. It's the same physical metal, right? Gold in the U.S., already present in the U.S., is the same as gold in Switzerland. There's no rational reason that there should be any difference in the price for the metal. But the tariff, the 39% tariff, is forcing that issue. It's setting up sort of an unusual situation with this investable commodity, with gold. So who is going to pay the inflated prices? Who gets to pay the 39% tariff? Good question. That's one of the subjects that's been discussed in all the hoopla in the media, is who gets stuck paying the 39% tariff. So there's two main physical forms of gold that are being discussed in relation to this tariff. Okay, 1 kilogram bars and 1,000 ounce bars. A kilogram is about a third of the size of the 100 ounce bars. It's 35.3 ounces thereabouts. Gold dealers in the U.S., if they have to pay any portion of this tariff, they will have to pass it on. Now think about that. There's physical gold in the U.S. already. It has a physical presence already in the U.S. It's not being imported. It's already here. Metals dealers, gold dealers in the U.S., they're still going to have to pass on any sort of tariff price increase, right? So how would that affect the price of the commodity that's already here in the U.S.? So gold dealers will pass the price hike on to consumers. Some gold dealers will. Probably the big ones, the ones that have a lot of, have a lot on the ball, have a huge distribution, have a lot of money, don't need to pass on the tariffs as much as smaller dealers do. But so there will be varying degrees of increase in price of gold imported from Switzerland and from Asian countries too, because they're being subjected to tariffs also. Any country that has a trade deficit is being subjected to tariffs right now. So, so the inflated price. Let's talk about the inflated price of gold caused by the 39% increase. Any gold imported from Switzerland, in particular, both the 1 kilogram and the 100-ounce bars, they will be subjected to this 39% tariff. This creates an artificial and temporary, pay close attention to temporary, that will become critical in a couple of seconds here. The tariff creates an artificial and temporary price hike on US-based gold. What I'm saying is, this is a little bit confusing, the gold that is already present in the US, that is not subjected to any sort of tariffs, its price is still going to have to go up because it's a market, right? So if part of the market is paying a higher price for gold being imported, that will affect what people are willing to pay for gold that's already here. It will go up. It will tend to go up. And you will think, that doesn't really seem fair because the US-based gold, it's already here. It's already present. Why would the price of the US-based gold go up? But it's a market, so it will go up. This artificial and temporary price hike that will occur with US-based gold, there's no rational reason for the suddenly higher US price. No rational reason. After all, the gold in the US is the same as the gold, physical, the metal, in Switzerland and in Asian countries. It's all the same metal. So there shouldn't be a price hike. But like I said up here, there's an artificial and temporary price hike that will affect the already present gold in the US. Okay, so what will happen? Gold imports from some countries will stop or slow, dramatically slow. So Switzerland will probably reduce importing gold to the US. There are some imports that have already affected the price. US-based gold, the spot price is currently $3,400. We're going to see in a couple seconds here that's quite a bit higher than recently. So gold imports from Switzerland will most likely stop. And this is about Asian countries. This was a direct quote. Most Asian refineries have halted U.S. shipments. So there's a cutoff of supply, or at least a great reduction in the supply of gold being imported, right? So when you cut the supply and you increase the price of anything that is supplied, the gold in the U.S. will be affected because it's a market. It will tend to go up. So that's what people expect. The importing of gold will be reduced. The supply of gold coming into the country, into the United States, will be reduced. And unless the U.S. comes out and says, we are going to exempt 1 kilogram and 100-ounce bars from the tariffs. They haven't said that. There has been a rumor that the U.S. will say something like that, but they have not. But the U.S. has not said that. And if you think about it, wouldn't they have said that when the Swiss president visited the U.S. last week? They would have said something along the lines of, stay tuned, don't worry about the gold, we're going to fix that. The fact is they have not fixed it. There is still a tariff on these two types of gold, the 100-ounce and the 1 kilogram. So the Swiss did try to negotiate with the U.S. The Swiss came to the U.S. last week on the 5th of August to negotiate away the tariff. The U.S. said no. So here is the pump and dump. This is the possible gotcha and how to protect yourself from it. Because at the beginning of this year, 2025, in January, the price of gold was not $3,400. It was $2,600, right around $2,600. That was the spot price at the very beginning of January. So in less than a year, the price has gone up $800. That is a huge jump. And a lot of this is because there was this expectation that a tariff would be imposed, and it has been imposed. So we have pumped ourselves from $2,600 up to a spot price of $3,400. That's the pump part of the pump and dump. What if the U.S. comes out tomorrow and says we are restricting the tariff to everything that's not gold? In other words, gold will be exempted from the tariffs. What if the U.S. said we are exempting gold from Switzerland and any other country from tariffs? The price, the spot price, well, before we get to the price, what will happen to the supply, right? Because right now, major Asian refineries have halted U.S. shipments. The Swiss have significantly reduced the supply to the U.S. also. Anyone being subjected to tariffs for gold is cutting off the supply to the U.S., and the price has gone up. That's the pump part of the pump and dump. If the U.S. comes out tomorrow and says, we are excluding gold from the tariffs, they are exempted, this price will fall very quickly. It'll most likely drop back to, we think, right around the 2,600 level that was the spot price at the beginning of the year. So, did the U.S. intend to create a pump and dump from 2,600 to 3,400 and then all of a sudden drop it back down? Because if the U.S. comes out tomorrow, Monday, and says, we are exempting gold from tariffs, guess who will start importing gold again? really quickly, like immediately. Switzerland and major Asian refineries will increase the supply of gold dramatically, almost instantly. When the supply of something in a market, when the supply goes up, the price goes down. The 3,400 could drop right back to 2,600. So that's the dump part of the pump and dump. Did the U.S. intend to do this? Probably not. If you think about it, the tariffs have been imposed to create a balanced trade between the U.S. and any country that has a favorable trade surplus with the U.S. Tariffs are being used to balance out the trade. Gold may have just been caught up in that. So it may not be an intentional pump and dump, but it is a pump and dump. Nevertheless, if the U.S. comes out and says, we are exempting gold from the tariffs. If that happens, watch out, because the 3,400 price of gold will drop, most likely drop pretty quickly. Right now, the supply into the U.S. is restricted. These two big trading partners, Switzerland, major Asian importers, are not importing. They're restricting the supply into the U.S. That will come to an end if the U.S. tomorrow announces we are exempting gold from the tariffs. So there are market things you can do right now to protect yourself in the event that the 3,400 spot price rewinds back to where it was at the beginning of this year. In less than a year, the spot price has gone up almost $1,000. It's gone from 2,600 to 3,400 in less than a year. That's extraordinary, and that could be undone very quickly. So there are things you can do in the market. I won't go into the details. I don't want to give investing advice per se, the nature of how you do it. But there are things you can do to protect yourself, to hedge in the event that the price of gold drops significantly suddenly, because the pump part's already done. We have pumped from 2,600 up to 3,400. The dump could come if the U.S. says we are exempting gold bars from the tariffs. The price will drop. Will drop from 3,400 pretty quickly. The supply will increase almost immediately from these two trading blocks. So that gives you a little bit of the background on gold, the investing chaos. The main focus in the media has been the confusion about this announcement of we are exempting gold from tariffs. There's been a back and forth with, yes, the U.S. is going to exempt gold. No, they're not. Back and forth, leaving it up in the air. Me personally, I would just assume it's going to go back to 2,600 and take precautionary, protective actions to protect your investment. Because a drop from 3,400 to a much lower level, like what we had at the beginning of the year, it would be painful if you just try to ride it out. Because we all know how slow the price of gold tends to move. It only moves a lot, from 2,600 to 3,400 when there has been a restriction of supply, an artificial and temporary price hike. So that's kind of where gold is in the market. If you have any questions about this, please post in the comments. I'll try to answer. And I really want to thank everyone for watching, and have a great day.